Hello and welcome to the Bulletin with UBS on Monocle Radio. Each week, the sharpest minds and freshest thinkers in finance take you beyond the numbers and hype, right to the heart of the big issues of the day. This week, we're following up our special International Women's Day edition from earlier in March. We'll be joined by the authors of a new report from the UBS Global Wealth Management CIO that takes a detailed look at the state of women in the world, gauging progress thus far and seeking to understand the remaining barriers to attaining gender equality. The report, Gender Lens Investing, the State of Women in 2025, explores how investors can continue to align their capital intentionally in ways that dislodge the barriers to full potential that women face. As we'll hear, the report breaks down the flow of capital into three areas: investment for women, in women, and by women. These intersect with other investment sectors and levers of change like education, health, financial inclusion and wealth, and entrepreneurship. The authors of the Gender Lens Investing report are Amantia Muhedini and Antonia Sariyska, and I'm delighted to welcome them both to this week's edition of the show to tell us why closing the gender gap is a continued investment opportunity. Amantia Muhedini, first of all, can you set the scene? Take us back to the beginning of the process of creating the report alongside Antonia. Where did you start?
So let me take a step back and maybe just say, as we set out to work on this report, we started with a perhaps overly ambitious objective of doing a kind of review of how women are doing and what progress has looked like this century. And we quickly found out that there's a lot, and you could write really many reports on each of these areas that we'll go into. So this is just an overview here. But we'll start by saying we looked at education as that first area. That's really where we're starting our opening premise of the report for two reasons. One, education is one of those pinch points, if you will, in the system that can be both a barrier and can also be a ramp to close other gender gaps, to create opportunity. But also because education is that area where we've seen the clearest progress around the world. So what we note in the report is that just, some 25, 30 years ago, there was quite a gap between how boys and girls were kind of completing primary school globally. And by 2023, the latest data that we had from the World Bank, that gap had virtually closed. So that was very exciting at that early stage of education, really quite a kind of an optimistic view for us.
Yeah, I think that's really interesting. And I guess you touched there at the outset upon one of the great challenges here, which is to unpick the interconnectedness of all of these themes. Education, which you've spoken about, of course, women's health, female-led businesses, wealth and decision-making more broadly, inclusion on a much wider societal level. How much of a challenge was it? You said there that it was very difficult and very ambitious at the outset. But how hard is it to both join together and unpack all of those things independently? Because they're so interlinked, aren't they?
Yeah, definitely, Tom. And actually, so in the beginning, we set on thinking about gender lens investing in the more traditional way. But as our research progressed, we even opted into using the word investment, because for us, it kind of encompassed all of the collective action that will be required in the different areas of gender equality, equity, etc. And that collective action goes beyond just simple capital allocation or investing. It goes into building that ecosystem. And I think that's where Amantia started jotting down on a piece of paper of, how are all these areas connected with each other? And despite her beautiful handwriting, I think we managed to put together something that made sense for us and compartmentalize some of the findings that we were essentially uncovering in our research. So what you see there on the sketch in the report will be that perhaps simplistic looking framework, but we feel there's a lot of thought going behind it in terms of that interconnectivity. So we focus on investments for women, investments in women, and investments by women. And we feel within each of those areas of investment, there is progress made, there's still gaps to be filled, there is a call to action, and of course there is an investment opportunity for those investors that actually want to actively tackle that area.
Yeah, well, maybe let's go through them one by one. Let's start with investment in women, first of all. And obviously, this is fundamental to help us understand and close that gender wealth gap, which we've discussed before. And we need to look at lots of things one might imagine, and perhaps some areas that one might not. This, of course, would involve female employment, earnings, assets, investment, and so on. But, the point the report makes is that very deliberate investment in women is needed to address the gaps I guess, across all those areas. Maybe let's start by talking about that one first of all.
By starting there, you truly are getting us to start at the heart of the gender gaps. And so let me start by saying two things here. On the one hand, we looked at all of the different facets of the gender wealth gap. And for us, in this research, that meant looking at female labor market participation. How are women coming into the workforce? We looked at the earnings gap. So once women are in the workforce, what do their earnings look like? No surprise to anyone, we stand here on the shoulders of giants and other research pointing to a consistent and not budging kind of gender earnings gap around the world. We looked at home ownership, which is a huge component of actually how individuals around the world are building their wealth. A lot of private wealth comes from owning a home and the value that that stores. And then we looked at entrepreneurship, or women not as employees, women not as homeowners, but women as business leaders. And again, that is another kind of area where there are gaps and investment is needed. Maybe I can say a couple things about entrepreneurship that we found particularly interesting. I like to highlight two of the many statistics. One, if we think just around the world, we look at data from World Bank, we were maybe surprised, maybe not surprised to see that only a third of all companies globally are either owned or co-owned by women. And here, this data set is not looking at kind of the, those companies that you would have venture kind of investment dollars going after. This is really the real economy. This is everything from your coffee shop down the street to those, companies that could scale and list on public markets and so forth. And so a third of those are owned or co-owned by women. That's obviously a gap. It's not what the world's female population is. And so that's one area where investment and kind of deliberate action is needed. Now, the other thing that we looked at was that subset of venture-backable and venture-backed companies. We looked at PitchBook data from the US market, and there we were quite interested in seeing the difference between companies that are only funded by only women and companies where there's a female co-founder. And in short, what's interesting is that there's a lot of attention around the fact that companies founded by only women are still getting consistently single digits below 5%. It's often in the 2 to 3% of all venture dollars. But what was interesting to us is to kind of broaden a little bit the aperture and look at those companies that have a male and female co-founder. And there we're looking at about a quarter of US venture dollars in terms of dollars and in terms of deal count. And that's actually, it's starting to look a little bit more optimistic. Still a gap, but not as terrible as the 2 to 3% number would imply.
Well, yeah, and can we interrogate a bit more the opportunity here? Because those numbers, as you said, they may be slightly better or slightly less bad than they may imply at first reading. But I guess it's important to say there's a huge opportunity here, right? Both to drive change, but there's also an opportunity in terms of investment performance. We know that these businesses typically do better. We know that where the investment flows into female-founded businesses or co-owned businesses, they perform better. Is part of it a bit of an education piece, and using research like this that fleshes out those numbers to really demonstrate how much difference can be made if people are just a bit more intentional. And I say people because it's male investors also are more intentional in their decision-making, right?
Yeah, no, absolutely. And we've looked at a range of reports here that speak to this financial performance. Some of it is data that looks at public market performance. So namely, there's a McKinsey study that is widely cited that shows that more diverse team are 18% more likely to outperform non-diverse team on an EBITDA basis. So that's one research. A second kind of different body of research is not so much about financial performance, but about innovation and how having more diverse teams is related to those companies driving more innovation. I guess you could have two questions that we hear a lot about this question of investing deliberately in female-led companies. One is, well, is performance going to suffer? And therefore, we look at this data on performance. But the second question is, am I going to limit my investable universe so much that I just don't have anything to invest in? And that is also just plainly not true. That investable universe is expanding, it's ever growing, and it's true across sectors.
Maybe, Antonia, let's talk a little bit about investment for women. Just talk us through that section again, and maybe talk a little bit about the objectives at the outset and then what the learnings were.
At the onset, we really wanted to go back down to the basics and really think about how do women throughout their lifetime acquire skills, right? That's the education section. How do they participate in the broader economy and in financing decision-making, for example, through financial inclusion? And last but not least, how are they doing on healthcare? And Amantia already mentioned some of the progress that's being made on education. That's probably the most advanced of all three areas that we identify in the report. We know that more women go to university nowadays than men, right, becoming this educated workforce, and they participate increasingly more in science, technology, engineering, and math subjects, which is probably what's going to give them a little bit more of a platform to become part of, future technology development, innovation, etc. So on education, we feel fairly confident that there is already quite a bit of progress. Now, we looked at financial inclusion and we were really thinking about, are women today bankable? Are the financial services out there willing to take on women as customers? But not only that, are they serving them in the right way? And one of the things that we found is that women continue to perceive their financial advice perhaps as not as optimal, that they still don't have as much access to banking services as probably the general male population. And that comes as no surprise. I mean, women didn't really have access to bank accounts until about 50 years ago in many countries, or even less without a male co-signing for them. And of course, the landscape of financial services has changed over the years. So one of the key findings we had there was the role of fintech, right, financial technology, and to what extent that can enable women to participate or be more included in financial services, similar to how women are taking advantage of technologies in other spectrums of their life. For example, the way they purchase goods and services online, the way they participate in other technological development, in early adoption of technologies, and so on and so forth. And to what extent fintech would enable women to maybe have an easier, more straightforward conversation about finance, to maybe have a bit of a less intimidating access to their bank accounts, to their assets, and so on and so forth. So financial inclusion is probably that area where we still have a bit of a gap, but we see the industry actively trying to target that gap, and the development of technology being very important there. The third piece of investing for women that we've explored has been around healthcare. And healthcare is very important because we know that women on average live longer than men, on average 5 years longer than men even. But when we look at the actual statistics on kind of longevity and health and quality of life, they actually spend more years in poor health and disability. So that means that women are more likely to need healthcare services because they're likely to live longer, because they're likely to be in poorer health overall. And actually, McKinsey estimated that if we close just a quarter of this health gap that exists today for women, we could be adding $1 trillion to the world economy. So it's definitely one of those areas where we still notice quite a bit of a gap, but if filled, that gap is going to be not only beneficial from a social perspective, enabling those women to be more productive, to potentially stay longer in the workforce, to take up a better quality lifestyle, and so on and so forth, but also it's going to bring that economic benefit in terms of the rise of GDP in the economies.
Let me just ask, maybe I'll bounce this over to you, Amantia. In terms of investment by women, there's some amazing, we've discussed on this program before, an astonishing wealth transfer that's happening. Well, of course, we hear a lot about the intergenerational one, but also there's an intergender one. Women are controlling more wealth than ever before. And women have never been wealthier on average than now. There's so much of that to celebrate. But talk a little bit about the investment by women section. And against that backdrop, what kinds of things did you find out?
Yeah, so that piece of the report was fun for us to look into. And in some ways it was challenging because so much has been written already about the intergenerational wealth transfer, kind of women becoming wealthier. I think maybe a couple things that we can highlight. One is that there are, of course, more women now than ever that are billionaires. And in terms of kind of the delta, the number of women that are becoming billionaires versus men that are becoming billionaires, more of them are self-made. In other words, they're entering in this category through the valuations of the companies that they've built and led. And so that's very exciting. And it really ties to these other areas, right, of investment for women and investment in women. This is what it gets you. And so that's kind of an interesting perspective here. Now, on the flip side, one thing that we found interesting and maybe a little disappointing is that although women control and will be the beneficial owners of a lot of this wealth increasingly, when it comes to the financial decision making, we still are not seeing numbers which are commensurate or proportionate. So a 2021 industry research report showed that only 4% of family office principals globally are women, and only 3.5% of global family offices are led by a female CEO. So this really does not compare to the 11% of women that are on the Forbes billionaires list, for example, and it certainly does not compare to kind of the broader numbers we're talking about in terms of women controlling over a third of global wealth. And so there's a gap there, and there's really an opportunity for women to really step up to that table, lean in, and actually take control in the day-to-day decision making around all of this wealth that they will be, shepherding and stewarding forward here.
Yeah, and as Amantia mentioned, that seat at the table, that leaning in, is really what brings the investment by women to life, right? Because as women take over that wealth and becomes increasingly more active in household decision making, we know today that women control 75% of discretionary household expenditures, right? Kind of the day-to-day bills and grocery shops and budgeting for the family. There is a leap that they still need to make when it comes to actually creating longer-term financial assets and having that decisions. Amantia mentioned family office principals and CEOs. We see very similar thing when it comes to financial services industry and female portfolio managers, which are still under 20% of the total kind of base of portfolio managers around us. So there's definitely still quite a bit of room for women to get that seat at the table and essentially make their own decisions about the allocation of capital.
Yeah, and I was going to ask about this because, again, the report sort of helpfully instructs people or suggests ways to take action decisively to help move the needle on these. How much of it is about, I guess, the market kind of reacting, ensuring, if we look at investments, that there are products out there that serve those needs? How's that narrative come along? That maybe wasn't in the original sort of scope of this piece, but are we seeing innovation on that side of things keeping pace with what must be the demand that's coming through from clients and other stakeholders alike?
Yeah, I think that's a very interesting question, because we could think of it from two lenses, and we tried to capture some of that in the report, but as you said, Tom, not as explicitly perhaps. One of it is thinking of women as consumers, and to what extent are companies gearing up or developing products and services that are specifically tailored for women as consumers, or increasingly more inclusive of women as consumers. And we mentioned fintech when it comes to financial inclusion. Another area of development has been femtech, right? The kind of the range of technologies and technology companies that have been focusing on female health. And that's been a rising space within technology, still very nascent, but we're already seeing over 10 unicorns globally, right? Companies with over $1 billion valuation that are explicitly focused on the femtech side of the market. Now, the second lens we could be thinking of is women as investors themselves, and to what extent financial advice is enabling them or tailored to them in order to help them then allocate and make investment decisions. And here we spoke briefly about that, about kind of the changing narrative of how, financial services and investment advice is being provided to women, but also the range of increasingly more opportunities for women to invest in that also helps them translate maybe some of their own personal values and preferences. And here's where sustainable investing, for example, tends to come into the discussion. I know I mentioned two, but maybe there is a third lens there, and that's the one that Amantia was talking about, which is investment in women. And to what extent, the broader investor community would be able to identify opportunities within gender lens investment, make those investments in women, and to what extent asset managers are going to be able to provide sustainable solutions or gender lens investment solutions on the market. And we've seen some of those already, for example, those that are based on data on publicly traded companies, about the diversity of their workforce. And these type of strategies have been gaining traction, but then also increasingly so maybe a bit more on the private equity side, where sort of focusing on female founders and the better economics that they're increasingly bringing into the space. That's probably another area that is quite innovative. And one of the things that Amantia and I like to say is that, maybe not every woman would identify herself with this report, but we're hoping this gives a lot of food for thought and a lot of call to action and just encourages that debate to continue. Maybe for female investors, one of the things that we advise them to do in the report is to just give it a go, right? So to really kind of go into the bank account, go into online banking, try to understand what's happening with the assets, and just try to experience for herself what that wealth or what that investment capital looks like and what it could do. And probably that first step is one that, it takes courage. We all know that. We've all been in that situation. But hopefully that opens the door to a lot more conversation and a lot more questions. So that's probably the one thing we would advise our female investors.
Sure. So I would add to that, of course, speak to an advisor. But really, what to speak to an advisor about? In my mind, it's a question about spending some time to deliberately ask of oneself, what are my assumptions? And that's a general enough question, right? If you are someone who's reading the report and you are a male ally, then ask about the assumptions about your partner or other women in your life. If you're a woman who is a professional investor, so a lot of this will not apply. Some of it might, but let's say a lot of it will not apply, then maybe the assumption here is, what does my investment strategy look like? Am I considering kind of this broader flywheel effect, an opportunity of investing in women, right? Maybe that part isn't happening, even if the rest of it is happening. So really that kind of like, what am I missing here? Have I thought through everything? That's kind of another more general question and conversation to have.
That was Amantia Muhedini, and before that, Antonia Sariyska. Bringing us to the end of this edition of the Bulletin with UBS, setting the agenda in the fast-moving world of finance each week here on Monocle Radio. You can discover more and find out how UBS can help you at ubs.com. And while you're there, search Gender Lens and find more information and resources. You can also follow UBS's global Instagram and LinkedIn channels for more inspiring ideas to invest for progress. This is the Bulletin with UBS on Monocle Radio. I'm Tom Edwards. Thanks for listening.